So after months of grueling talks, Ghana has finally reached a bailout agreement with the International Monetary Fund for a deal worth about $1 billion. Will this restore investor confidence? Will it stabilize the currency in an economy that, to put it nicely, has lost some of its luster? And what, at the end of the day, is the cost of these funds? We'll be looking at those questions and plenty more in the next half hour right in Global Business Africa. I'm Raman Yang in the Kenyan capital, Nairobi. Thank you for joining us. Here's what's coming up. Egypt has found new deposits of oil. We'll have the details. And we'll be looking ahead at the task that the Central African Republic's economic team faces in reconstruction. Let's start in West Africa, where the Ghanaian President John Dramani Mahama says his government will spearhead and implement policies to speed up economic growth while curbing certain vices, code word for corruption, that are affecting the country. Mr. Mahama spoke during the first State of the Nation address, where he pledged to completely overhaul the country's economy. Here's Mahia Mutua starting us off.
Ghana was once an example of economic and political success in Africa. But since mid-last year, the country has been struggling. Spiraling inflation, a weak local currency, volatile global prices for crude, and a budget deficit are some of the challenges.
As leader of this nation, by the grace of God, I, more than anyone else, understand the adverse impact of this energy shortfall on the growth of our economy. We have been here before. In 1983, in 1998, in 2006 and 2007, we suffered a similar occurrence. In the past, what we have done has been to manage ourselves out of the situation. I do not intend to manage the situation as has been done in the past. I intend to fix it. I owe it to the Ghanaian people.
As the country's focus shifts to economic growth, Mahama said his priority is to implement a solution to the current power crisis. The West African nation is currently going through a power crisis which started late 2014 that has led to the country rationing power. The president also appealed to his countrymen and women to support him in his efforts to transform the nation's economy.
As a people, we must make a conscious effort to eat what we grow and add value to our primary raw materials. This will support a stable economy and create jobs and improve the GDP per capita and enhance the standard of living of our people.
Mahama said his agenda is to transform the structure of the economy and position it as an export-driven rather than import-focused economy. Ghana recently reached an agreement with the International Monetary Fund for a 3-year aid deal worth around $1 billion aimed at restoring its fiscal stability. Mahia Mutua, CCTV.
Still in Ghana, the country is set to receive a loan of about $1 billion spread over the next 3 years, given a deal agreed to with the International Monetary Fund. Now, those funds are meant to help boost growth, lower inflation, but there are concerns, shall we say, about the terms of the loan, as Katerina Vitozzi now reports.
After months of talks, a deal has been struck. The International Monetary Fund will loan Ghana $940 million over the next 3 years. In a statement, the head of the IMF mission to Ghana said the economic programme was aimed at overcoming the country's economic challenges, supporting stronger economic growth and lower inflation. Ghana's GDP fell by half last year amid a fall in the market price of its main exports, gold, cocoa and oil. The local currency, the cedi, crashed against the dollar. Lenders hope that this deal will help Ghana get back on its feet again and make it a more attractive prospect for investors. But this money isn't without strings. The IMF says that there are 3 pillars to the deal: increasing tax revenue, making Ghana's central bank more effective, and scaling back public sector spending. More than half of Ghana's revenue is spent on paying public sector wages. Wage freezes and job cuts are likely, but they will be deeply unpopular.
Government should just look for other ways and means, to derive money. Maybe put more jobs into the system for people to work. They get their revenue, whatever, from there, then they can just push the economy.
I think it's not fair for the government to freeze the wages of public sector workers because, people, when you work, you have to get paid. And when you you know, you have family to feed. So the government have no right to freeze wages of public sector workers.
But experts believe if these cuts have to happen, they have to happen soon.
I think that this is the time for, if the government wants to undertake some adjustment, this is the time to do it. And maybe in a year's time, they will be over of it, and maybe they would have been able to stabilize the system. And then we get into the elections, you know. But if they should delay it, the adjustment and the economic reforms, then of course it will become more difficult to undertake those reforms going into the election year.
The loan could begin as soon as April, but in the meantime, Ghana's government says it has already started cleaning up its economy. Katerina Vitozzi, CCTV, Accra.
Let's get some more data from Miriam Bemard. She's been following this story with analysts and, of course, all the developments coming out of it in London. Miriam, the cedi is down about 9% against the American dollar so far this year. To what extent will this deal perhaps change the trajectory of the US cedi rate, or perhaps has the market already priced this bailout in?
Well, Rama, to some degree, the markets had already expected this agreement, especially after the cedi fell about 31% just last year alone. The idea is for this bailout to actually restore investor confidence. Let's not forget that Ghana's central bank said in January that it was ready to intervene vigorously this year to ensure stability, citing the pressure on the cedi as seasonal and temporary. But critics argue that Ghana, despite being one of the top economies in the region, has stumbled because of its dependence on oil production. And investors want to see what the government will do to fill the gap from missing revenues, especially with markets forecasting the currency will actually drop by another 10 to 15% against the dollar, the US dollar that is, in this time frame, despite the IMF aid that we're seeing.
Given that this deal, however, does with the IMF fall smack in the middle of an electoral cycle, rather, because, I mean, Ghanaians are going to the polls next year. How does the IMF assess the risk that Ghana may not necessarily meet the targets that it has signed up to as part of this bailout?
Should we just say it's coincidence, Rama? Perhaps not. You know, talking to analysts here in Europe, the common consensus is that spending hasn't always helped curb the country's problems, and the IMF has assessed that risk. The challenge really will be for the government to curb its exposure to external risks like lower oil prices, which is certainly we're seeing that volatility in the prices week to week, and of course borrowing costs. Despite it being less reliant on oil than countries like Nigeria and Angola, its debt didn't hold up as global crude prices fell. All eyes will now be on its fiscal consolidation in the next 3 years to bring the fiscal deficit down from 9.5% to anywhere between 3.5% and 4%. Let's not forget Ghana was one of the top performing economies in the region, and its advantage was also its demise with oil production and new offshore projects back in 2010. That, coupled with gold and cocoa helped bolster the country's exports. This time around, it's a very different picture, and of course, right ahead of elections. We'll have to see how the government will also play that, perhaps new promises, new pledges.
Indeed, and a lot of fiscal consolidation as well. Plenty of economic pain coming Ghana's way. Thank you for that. That's Miriam Bemard live in London. Let's take you to Egypt, another commodity producer. It's made new oil discoveries in the south of the country. The Southern Valley Oil Extraction Holding Company says the new 7 oil wells from this discovery ought to produce about 430 or so barrels of crude a day. Production will start in the second quarter of the year. Yasser Kim has more.
It's been welcome news for the oil sector, as the oil reserves from this new discovery will be about 9.6 million barrels. Southwest Egypt is a huge untapped desert area. This is the 4th discovery recently in the same spot. This confirms earlier indications of vast oil reserves there. A recent tender has seen 17 contracts signed to explore oil and gas in 10 locations in southwest Egypt. Investments there so far have reached $442 million in 1 year alone. Egypt is facing a shortage in energy, which has affected electricity production and the supply of energy to heavy industry. The government spends 1/5 of its budget on subsidizing and importing energy products. Any new discoveries will help reduce the state's budget deficit. Yasser Hakim for CCTV, Cairo.
Let's talk about a country that hasn't gotten, frankly, the media attention that it does deserve. The Central African Republic. It's been unable to tap into its relatively rich diamond wealth in the wake of a conflict within its borders. The country primarily depends on exports of this precious stone, and under development, it's on an embargo right now on its exports, and that means it remains among the poorest in the world. The trade minister in that country, however, is pretty optimistic that these issues will be resolved and the country will soon be able to tap into and benefit from its mineral wealth.
My colleague, the Minister of Mines and Geology, has taken several measures to curb illicit diamond mining. He's travelled severally to talk to our outside partners to follow the diamonds which are exported and sold from our country. We're also relying on the Kimberley process to curb this illicit trade. CAR is under an arms embargo because it is unacceptable for countries in conflict to export commodities such as diamonds. The government is doing its best to fight illegal diamond trade and to have our eyes on the diamonds and other minerals.
La République centrafricaine est sous sanction.
CCTV's Penina Karibe has been in the Central African Republic for the last week or so. She joins us now live from the capital of Bangui. Penina, once the violence erupted way back in 2013, the CAR was kicked out of the Kimberley process altogether. What's the diamond mining industry been like since then? Are exports still going on?
Well, Rama, the mining industry here is still very much alive, albeit illegally, if I must say so. Mining is still continuing, Rama, despite, of course, that ban. Now, let me just give you an example. Bambari region, that's about 400 kilometers from the capital, Bangui, is under control of the Seleka rebels. This is a region that's quite rich, Rama, in minerals such as diamonds, gold. It also has coffee. And we understand that the government has absolutely no presence there. Now, we were getting information from locals, especially in that area today, that the Seleka rebels are forcing the local population to mine for them the diamonds. They're then selling it across the borders. Now, this obviously is quite alarming, Rama, because putting things or effects of this into perspective, we know that the Central African Republic is the world's 12th leading producer of rough diamonds in terms of value, and the diamond industry accounts for about 40% of the total export revenue. So you can imagine how much the country is losing in terms of revenue. And of particular concern is the fact that the eastern diamonds are located at the heart of this conflict, Rama.
Indeed. What conditions, aside of course from, in this case, tangentially dealing with Seleka, what conditions does the CAR's government need to meet before it can be readmitted back into the Kimberley process and therefore be able to sell its diamonds legally on the open market?
Well, we know, Rama, that one of the statutes of the Kimberley process is that any country willing to be a participant must ensure that any diamonds from that country are not fueling a rebel group and not even fueling an entity that's seeking to overthrow a government that's recognized by the UN. Now, that's particularly difficult for the Central African government right now because large parts of the areas here in the country are controlled by armed rebel groups. So it's quite difficult. The transitional government at the moment has absolutely no capacity to deal with these rebel groups. Now, we also know, Rama, that the government needs to tighten its internal control systems for the diamond industry. Again, that's quite a difficult challenge for the government because a lot of government institutions are barely operational. So we have seen the mining minister going on the offensive, trying to get the international community to support his country's readmission into the Kimberley process. A lot of people here pegging their hopes on those efforts because many communities here, Rama, depend on artisanal mining to earn or for their source of livelihood. And most of them have been telling us they are mining the diamonds, yes, on the small scale, but getting a buyer to buy them is proving to be difficult. And those who do are exploiting them because they're doing it on the black market. So a lot of hopes here that maybe the minister's efforts will bear fruit, but it's going to be difficult, Rama, convincing the international community to support the CAR's efforts to be readmitted to the Kimberley process given the present conditions.
Indeed, quite the catch-22 there for the CAR. We'll have to wrap it up for there. That's Penina Karibe live in the Central African Republic's capital of Bangui. Here's a quick run through the markets now for you. Some fairly tepid, if you will, numbers coming through on the markets today. The all-share index in Nigeria up by about 0.2 or so. Over in Kenya, not much in progress, up about a third in the markets today. Global Business takes a short break. We'll be right back with more business from across Africa.
This is the first year that Africa will have more foreign direct investment than aid. And it's like the tipping point in terms of changing the way the continent is perceived. And I think this summit very much responds to that call. Now, whether it can materialize what is being announced is something that we'll have to check and see whether it happens.
Welcome back to the program. Let's focus on the business of media, specifically digital migration. We're wrapping up our special series in Nigeria. Africa's biggest economy is racing against time to beat the deadline for the switchover from analog transmissions to digital terrestrial systems. Now, if everything goes according to plan, the country will fully welcome digital broadcasting before the global deadline of June the 15th. But before that happens, there's a lot of work to be done, as Teji Badmus now reports.
Unless there's an unlikely change of plan, in about 4 months from now, the way millions of Nigerians receive signal onto their television sets will change for good. It will be one of the most remarkable developments in Nigerian broadcasting since television first arrived here in 1959.
All the television signals that are currently available today come June 17, 2015, they will go off. All the TV channels you see today will go off, and you will have to watch television. Either if you have an integrated TV set that can receive digital signals, or you have a set-top box that is able to decode the digital signal to your current analog TV.
Emeka Mba's National Broadcasting Commission is saddled with the responsibility of overseeing the digital switchover. He and his team have been meeting and working with stakeholders in the industry, like TV channel owner Jide Adediran, to meet the June 17 deadline.
We have a committee in place. We have comprised of NBC and other major stakeholders, set-top box manufacturers, alongside with channel distributors, the licensed channel distributors and channel aggregator in Nigeria, with content providers or channel owners, as the case may be, coming together, sitting on the round table to fashion a way forward on how to ensure each free digital switchover come June this year. I'm sure we are very, very optimistic that we will get something done.
One of the most important equipment in the digitization process is a set-top box, which is basically a decoder. About 80% of household television set in Nigeria is still analog. It means millions of people would need the set-top box to be able to receive digital terrestrial signals.
But we've done it in such a way that minimum standard is set so that those who are only interested in receiving the free-to-air stations will buy these set-top boxes at a minimum cost, not more than 3,000 naira at the upper, at minimum cost of about 3,000.
But with few months to the switchover date, the set-top boxes are not readily available. And to make matters worse, most Nigerians know next to nothing about the digital switchover and are not even aware that they could wake up one morning to find out that their analog TV sets can no longer receive television signals.
I have not much understood what they mean by going digital, except in the course of this interaction, then we'll be able to understand ourselves very well.
I got the information last week. A friend of mine just told me that he just got the message on a cable that there will not be anything like a local area or showing on the time or something like that. And I started saying, okay, we are in a new regime time.
Without the needed enlightenment, used analog TV sets are still selling on the streets, and people are buying them because they are cheap, not knowing that soon they will be needing a separate box to be able to watch their local channels.
From a broadcaster's perspective, the broadcasters are 100% enlightened about what the switchover is about, but the consumers are not so enlightened, and then this is something that the Nigerian government can work on between now and June.
I want to believe that the little time we have is still enough to create this awareness if you actually roll out our drums. And fortunately, all of us channel owners, born, and everybody were involved. So we have what it takes for mass media to get everywhere. Yeah.
Close watchers of the broadcast industry here say it's still not a certainty that Nigeria will meet the June 17 digital switchover deadline. The National Broadcasting Commission still faces serious funding challenges, but it says it is cautiously optimistic it will beat the deadline. Deji Badmo, CCTV, Lagos, Nigeria.
Now, the creation, distribution and the viability in a commercial sense of content is right at the heart of this digital migration debate right across several African states. For an in-depth examination of the state of Kenya's film industry, I'm now joined by Lizzie Chungoti. She's the CEO of the Kenyan Film Commission. Thank you for your time.
Thank you.
Let's start from 2011. Your former CEO at the time, Peter Mutia, I believe, he pointed out that there were three key challenges that the film industry faces. Talent, a lack of financing, and a lack of post-production infrastructure. Is that still the case today?
I would say that financing is still the case today, but again, it is work in progress because we do have a product that the government is rolling out, but it is a loan product. Yet the film industry, by and large, globally, the practice is that you would have a film fund. So yes, that is, that's a big challenge for us. Film is expensive to produce, so we do need a fund that filmmakers can tap into, and especially now that the tables have turned and there is suddenly huge demand for content. In terms of talent, I would say that Kenya has a lot of talent. For me, the biggest challenge is not the talent, but where to actually hone those skills. And I'm happy to report that this year, for example, the government is coming up with 2 film schools, and one under the Ministry of Sports, Culture and the Arts, which is going to be a film school with a difference, so that by the time you're actually graduating, you are ready for the market. And that is going to be for those who want to do it for academic reasons, but also those who are just talented and actually want to hone their skills in various areas.
When you talk about financing being a challenge, what exactly is the issue here? Is it that those who do have the capital don't understand the business model involved when it comes to financing a film, or they do understand it, but the risks involved in terms of, will I make my money back? Who's going to buy the product? Those are things that those are risks they're not willing to take on.
Yes, it's actually a bit of both, because one of the key things that the Commission is supposed to do is to create pipelines, whether human or financial. So in the way you have put it, yes, investors for a long time did not understand how to put or invest in film, for example, because it's not something tangible. It's not like putting money in real estate and so on and so forth. So that's one of the challenges. But I'm also glad to report that for the first time, we are actually hosting, in partnership with the French government and the French Embassy in Nairobi, the first international film and TV festival and market in October this year. So that is going to bring a convergence within the East African region, and we want Nairobi to become the place to go to. And now with the migration also, we want to create a convergence. So across the whole spectrum of film and TV, whether you are into equipment, whether you are looking for content, whether you want to pitch your content. So that will create an opportunity for investors like that. But the other thing is that the filmmakers themselves also need to tap into resources to produce good quality and also the quantity that is needed. So yeah, there are two sides to that.
We've got to come to the question of the size of the market.
Yes.
Based partly on recent developments that have occurred here, but also in comments made again by the former CEO, Peter Mutia. This was 2011. Unless we sell across borders and overseas as well, the industry will continue earning less. That leads one to ask, is Kenya by itself, 40 million people, lots of internet connections out here, is this too small a market?
No, it's not too small. Actually, it's untapped. When you think about it, we only have about 3 million TV households. And if a household has about 2.5 people, so you're talking about 8 million
probably
people.
More than 2.5, given how many people we have.
Yeah, that's true. So it's largely untapped. And also when you talk about the domestic market, you're also talking about the region as a whole. As you know, East and Central Africa has about 150 million Kiswahili speakers, so that's a huge market for Kenyan filmmakers. Also, more recently in 2013, we had the Kenya Information Communication Act under CA, Communications Authority. that requires at least 40 and going up to 60% local content. So, you know, we are seeing, you know, that dynamic has actually changed over the last 3-4 years. And obviously, when you look at Mnet, for example, undertaking programming like Vitimbi, it just shows you that there's a huge thirst for local content. People want content that they can associate with. It cuts across all social classes. So I would say that it's very, very untapped.
If that's the case, let's focus on something that happened on the 20th of February. DSTV, owned, of course, by Naspers. For those of our viewers who are watching elsewhere, Naspers listed at the JSE. They essentially have a very strong play across pay TV in Africa. They shut down an East Africa-focused channel, Maisha Magic. And the argument they made at the time was that, and I'm quoting the CEO here, the channel's unable to achieve the ratings consistency needed to sustain the business or support continued investment. I mean, that's a fairly damning indictment of the industry as a whole, isn't it?
That's true. That's true. But, you know, Kenya is very interesting. When you look at it from a pay TV perspective, it's a very, very competitive market. You don't get that anywhere, not in Southern Africa, not in Western Africa, because what happens is we have about 47 free-to-air broadcast stations. And then you will find that Kenya has very, very strong free-to-air broadcast stations. And you don't get that elsewhere, not in Nigeria and not in South Africa and not anywhere else in Africa. So that in itself is very, very unique. And it's very difficult, actually. It has been very difficult if you're coming from a pay TV perspective. So again, it's not unusual, and it doesn't even apply to East Africa, but specifically to Kenya.
All right, the Kenyan
so
exception.
I think it's, it was just a good business decision, but it doesn't mean that, you know, there's no potential to actually enter into this particular market.
All right, we'll have to leave it there, unfortunately, but thank you very much for your time. We've been speaking there to Lizzie Chongoti. She's the CEO of the Kenyan Film Commission right here in studio. Now, a quick run through commodity prices here for you. Some interesting developments across the board, but let's focus on the macro picture here briefly, if we may, with regard to questions of oil. There's a burst of liquidity that fell into the Nigerian banking system, and that, of course, about $1 or so billion, give or take. And at the end of the day, that's lowered overnight lending rates quite a bit, by about 8.25%. Right, that's it for this edition of Global Business Africa. Thank you so much for being with us throughout the week. If you've got thoughts, ideas on what we do around here, Global Business Africa at cctv.com is the email address to use. Facebook and Twitter, of course, are your port of call when we are not on air. We'll see you on Monday. Thanks for watching. I'm Ramanyan.